All right, welcome to TalkTickers. Today, we're digging into Deutsche Telekom's Q2 2025 results. And folks, this was a weird one. We're talking about a classic Wall Street paradox. The company raises its guidance for the whole year, and what happens? The market tanks the stock, sending it down over 5%. So, what's going on here? Let's get into it.
So this is the big puzzle we're going to unpack today. How can a company come out and say, hey, we're feeling even better about our business this year, only to have investors basically hit the panic button? To really understand this, we've got to look past the big headlines and dive right into the details of the quarter.
So let's just lay it out there. On August 7th, the company projects earning more money and generating more cash for the rest of the year. Seems like great news, right? But the immediate reaction was a fast and pretty painful sell-off. What on earth did the market see that wasn't in that shiny new guidance?
And when you see it visually, the disconnect is just wow. On one side, you have management boosting their forecast for both core earnings and cash flow. That's a big vote of confidence. And on the other side, a 5% drop in the stock on some really heavy trading volume. This stark contrast right here tells the real story of the quarter.
Okay, to solve this puzzle, we have to start where it all begins, the actual performance numbers from the quarter, because the answer is buried right here, in this mix of beats, misses, and some pretty telling trends that painted a really complex picture for anyone watching.
So at first glance, the results look kind of okay, a bit mixed. Adjusted earnings per share, that actually beat what analysts were expecting. That's a clear positive. But group revenue came in just a little shy of the forecast. The real red flag, though, the thing that really spooked the market, is right there at the bottom. Revenue in their crucial home market of Germany actually declined 1.3%, and that is where the trouble really begins.
And yet, despite that weakness in Germany, the company raised its full-year outlook. They now expect adjusted EBITDA. That's a key measure of profitability of over 45 billion euros, and free cash flow, the actual cash left over for investors, of over 20 billion. But this confidence, it wasn't coming from Germany. Nope, it was almost entirely driven by the absolute powerhouse performance of their US business, T-Mobile.
And that right there brings us to the core conflict of the quarter. See, this isn't really one company's story. It's a tale of two completely different markets. It's like you're looking at two different companies under one roof. You've got this booming, high-growth engine in the United States that's being weighed down by some pretty serious headwinds back home in Germany. And I mean, the difference between these two markets is just night and day. In the US, T-Mobile is absolutely firing on all cylinders. Service revenue growth is speeding up, hitting over 6%. Meanwhile, back in Germany, revenue is actually shrinking. It's not one story, it's two completely different trajectories happening at the same time.
And it's not just about the money, right? It's about momentum. It's about the customers. The US business added a record number of those high-value postpaid customers. The sticky long-term subscribers that every company wants. But at the exact same time, in Germany, Deutsche Telekom lost 20,000 broadband subscribers. For a mature telecom company, losing any subscribers in your home market is a huge red flag for investors.
So how does management explain this? Well, they're calling it a value over volume strategy. The CEO, Tim Hoteges, is basically saying, look, we're okay with losing some less profitable customers in the short term because we're focused on cashing in on our big long-term fiber investments. It's a strategic choice for sure, but it's one the market is clearly not happy about right now.
But here's where the story takes a really interesting turn. While the market was totally fixated on those German broadband losses, the company was busy laying the groundwork for its next massive strategic move, a huge bet on artificial intelligence that could completely redefine the company. They're calling it the AI Gigafactory. The plan is to use their massive network infrastructure, all that 5G and fiber, to build an industrial-scale AI cloud for Europe. Now, this isn't just about making their own company more efficient. This is about creating a brand new revenue stream and positioning Deutsche Telekom as a central player in Europe's digital future. And look, this isn't just some vague pie-in-the-sky idea. They've already locked in a partnership with NVIDIA, which is going to supply 10,000 GPUs to get this thing off the ground. And the best part? They're not waiting for some massive new building to be finished. They plan to start deploying these chips in data centers they already have and serve customers as early as the first quarter of 2026. They're moving fast.
Okay, so you've got this weakness in Germany, incredible strength in the US, and this massive AI moonshot on the horizon. How do you even begin to process all that as an investor? Well, that brings us to the next call, our forward-looking take on the stock.
All right, get ready for this one. The trade idea here is something we're calling a synthetic AI telco long straddle. I know it's a mouthful, but the logic behind it is actually pretty straightforward. It's all designed to capitalize on what we think is the market's overreaction to the bad news coming out of Germany.
So here's how it works. Think of it as a two-part bet. Part one is the bull case. You bet on Deutsche Telekom. The idea here is that the market is way too focused on Germany and is completely missing the value of the cash-rich U.S. business and the huge long-term potential of that AI Gigafactory. Part two is your safety net, your hedge. Here, you bet against a basket of smaller German internet providers. The thinking is that these little guys just won't have the scale or the cash to compete with Deutsche Telekom's massive investments in fiber and AI.
So, looking ahead to Q3, here's our call. We predict continued pressure on those German subscriber numbers. But you should watch for management to really highlight stable average revenue per line, or ARPL, to show they're holding on to the valuable customers. The stock will probably be choppy in the near term, but any positive news on that NVIDIA AI partnership could be a major catalyst. Bottom line, we rate the stock outperform. So after digging through this whole quarter, it all really boils down to one fundamental question. A question about what kind of company Deutsche Telekom is today, and more importantly, what it's trying to become tomorrow.
But before we get to our final thought, just this standard but very important reminder, this is not financial advice. All investment decisions have risks, and you should always make them in consultation with a qualified financial professional.
And this is the question you really have to ask yourself. Is Deutsche Telekom just a legacy European telecom company slowly getting weighed down by intense competition at home? Or is it actually a deeply discounted digital infrastructure powerhouse with a cash printing machine in the US that's funding a massive transformation into a key player in the European AI revolution? The market voted for the first one, but the future might just belong to the second.